Why do some property and casualty insurance policies get non-renewed? If you've ever received a notice that your policy won't be renewed, you might be wondering why insurers make these decisions. Today we'll break down the most common reasons for non-renewals, using examples for both personal and commercial lines, and discuss how insurers communicate these changes to policyholders. Non-renewal is different from cancellation. In most cases, insurers are required to provide advance notice before non-renewing a policy. Unlike cancellations, which can happen mid-term for reasons like fraud or non-payment, non-renewals happen at the end of a policy term, giving policyholders time to find alternative coverage. One of the biggest reasons for non-renewal is a large loss history or frequent claims activity. If an insured home or business experiences multiple claims, an insurer may determine that the risk is too high to continue providing coverage. For example, if a homeowner files multiple water damage claims in a short period, the insurer may decide that the likelihood of future losses is too great and opt not to renew. The same goes for businesses that have repeated liability claims, such as a restaurant facing multiple slip-and-fall lawsuits. Another common reason is tightening underwriting standards and reduced capacity. Insurance companies periodically adjust their underwriting criteria based on profitability, risk trends, and overall market conditions. For instance, if an auto insurer has been experiencing higher than expected losses due to inflation and rising repair costs, it may decide to raise its standards for policy renewals, requiring lower risk profiles for continued coverage. Regulations and the operating environment also play a role. In some states, insurers are required to file non-renewal plans with regulators before they can reduce policy counts in certain regions or business lines. Additionally, some states impose restrictions on when and how insurers can non-renew policies. If an insurer is facing regulatory scrutiny or requirements that make certain coverage unprofitable, it may decide to exit the market or scale back its exposure. Geographic concentration and catastrophic exposure are also major factors in non-renewals. If an insurer has too many policies concentrated in a single region prone to disasters, such as hurricanes in Florida or wildfires in California, it may non-renew policies to reduce exposure. This is especially common in catastrophe-prone areas where insurers use reinsurance to spread risk. If reinsurance costs become too high, insurers may have no choice but to reduce policy counts in high-risk areas. Another factor is portfolio management and risk diversification. Insurers constantly analyze their books of business to ensure they have a balanced mix of risks. If one type of business or geographic area represents too large a share of their overall exposure, they may decide to non-renew policies to balance their portfolio. Beyond claims and risk factors, insurers may also non-renew policies due to market exits or changes in business strategy. Sometimes an insurer decides to leave a specific line of business or even an entire state due to financial performance or strategic shifts. For example, an insurer specializing in small business coverage may determine that a particular industry segment is no longer profitable and choose to exit that sector entirely. Policyholders are typically notified in advance of a non-renewal decision, with the required notice period varying by state. In most cases, insurers must send a written notice 30 to 90 days before the policy expiration date. This allows policyholders time to seek alternative coverage, either through another insurer or, in some cases, through a state-backed insurer of last resort. If you receive a non-renewal notice, it's important to understand your options. You can reach out to your agent or broker to explore alternative coverage, consider improving your risk profile by addressing issues that may have led to the non-renewal, or check if your state has an assigned risk plan or market assistance program. As the insurance market continues to evolve, non-renewals may become more common in certain segments, particularly in catastrophe-prone areas and industries facing rising claim severity. However, understanding why policies get non-renewed can help policyholders take proactive steps to maintain coverage. If you found this video helpful, don't forget to like, subscribe, and follow for more insights into the insurance industry. Let us know in the comments if you have any questions or topics you'd like us to cover next. Thanks for watching.